Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, I'm doing good. How you doing, bro?
Always making it happen, big man. Today's guest is Daren Powderly. Daren is a co-founder of Crowdstreets.com, a technology solutions provider to real estate investment firms looking to digitize, modernize, and grow their fundraising. On today's show, we hope that Daren will present some opportunities for our listeners on ways to fund their future deals. So without further ado, Daren, welcome to the show.
Hey, thanks for having me, Jake and Gino. It's great to be here.
Thanks.
Thanks for coming on. Tell us about your background and how you started Crowdstreet.com.
Yeah, so I graduated CU Boulder back in 1997, and that was a good time to graduate. It was a good time, late 90s, tech boom, dot-com boom. There were a lot of opportunities available to me, and rather than going back to Wall Street, I decided to stay in Colorado and get in the tech sector. I eventually, about a year later, moved to San Francisco. So I spent about 6 years in tech. The dot-com bust made me decide to bail on that and bail on the technology industry and get into commercial real estate. So I did get into commercial real estate back in 2003. So I spent about 12 years in commercial real estate before identifying the opportunity for CrowdStreet. So a little bit of tech, internet software, a company that was acquired by Oracle. So I had a good technology run. And then I had a great commercial real estate run. I really consider myself a commercial real estate, career person. It's my CCIM. I studied really hard. I did have a global, if not, national, if not global outlook on investments and investment real estate. And so when the Jobs Act was passed, I was very entrepreneurial. I had started a few companies in my past, and I was the principal of my most recent firm, which is a commercial real estate services firm. And I had also owned and operated and syndicated my own deals. So, I was active, and I was looking for an opportunity back in 2012. And the Jobs Act was passed. The light bulb went off. It was one of those, like, my partner and I, identified the opportunity. It was like, let's do this. Let's go for it. And literally lost sleep for like a month. Just, staying up all night, registering domain names, came up with a name, writing down the business plan ideas, and just sort of like being an insomniac about this idea. It just caught a hold of me, like the entrepreneurial bug. I caught the entrepreneurial bug. I knew there was something there. This is back in April 2012. And I just couldn't let it go. I obsessed insanely about it. And that spawned a business, and that business became CrowdStreet.
So, Darren, can you define what crowdfunding is and how the Jobs Act of 2012 impacted that space?
Yeah, absolutely. So crowdfunding is a term that we actually prefer not to use, except the fact that it's so catchy.
Yes.
So what we believe we do is we help companies digitize their online fundraising. So we are in the private equity real estate space, right? And a lot of private real estate companies, us in our world, commercial real estate companies, they raise money from high net worth and private investors, right? And they do so in an offline manner. It's a very traditional, archaic, process that's been done the same way for like 30, 40 years. So what we do is we help look at their processes, and we help them, digitize and modernize that process and scale that process, right? So it's online syndication. And, I use some of those alternative words to crowdfunding because people confuse crowdfunding with like raising money for, to send their high school kids on a trip or something, or their favorite band, or, an art project. And, equity crowdfunding is something that was made available to the nation as part of the Jobs Act. And there it has its own definitions. The government has a definition of equity crowdfunding that doesn't really apply to our business, right? So there's all these different, elements. What we really do is we work with companies who do Reg D offerings, Regulation D. Rule 506B or Rule 506C, as well as Reg A plus offerings, which is a brand new offering type within the equity crowdfunding space. So Reg D offerings have been around forever, and that's basically our specialty at CrowdStreet, working with commercial real estate firms. So, yes, we do call it CrowdStreet, and we do associate with real estate crowdfunding. And I would say that there's much more, specific definition to what we do precisely for our investors and our sponsors.
Can you talk about the process a little bit of actually raising the money?
Yeah, so we have two areas of our business. One is the marketplace at Crowdstreet.com, and that's kind of what we're most known for. And that's some of your listeners, if they're real estate investors, they could go to Crowdstreet.com, and today they'd probably see 15 different live offerings. We launched one at 7 a.m. this morning, and it's a multifamily deal. It's
saw that.
Yeah. Actually, this morning was a hospitality deal, but multifamily is like 35% of our business. We love multifamily, and a lot of investors do for the obvious reasons that your listeners are tuned in with you. It's a great.
You're at the home of multifamily right now. You know that. This is the home of multifamily for the world right here. So.
Exactly. So yeah, I mean, we were at National Multifamily Housing Council back in San Diego back in January. I had 17 in-person meetings in one day. I mean, we were just swamped with these operators who were trying to figure it out because it works, and it works. It works great for the sponsor. It works great for the investor. So the way it works, to answer your question, Jake, is that we've got a community of 20,000 individual and institutional investors, mainly high net worth investors, right? We have some non-accredited investors in there as well, and they're absolutely welcome. All investors are welcome to join our community. The way that the Jobs Act works is that if you advertise, you have to prove that your investor is accredited. So we handle that part of the administrative flow process. But then we have on the two-sided marketplace, we've got 20,000 investors. On the other side, we have hundreds of pre-qualified commercial real estate firms, right? These firms come to us and they say, hey, I'd like to, get access to your investor community. I'd like to raise money for my deal. And we vet them. We vet them at the sponsorship level, at the principal level. We do the background checks. We confirm track record. We get references. We do a lot. It is a version of private equity, underwriting.
Sounds like Uber.
We have. Yeah, exactly. Try to, at the end of the day, you try to make sure no bad guys are driving your car, right? Or putting deals in your marketplace. And people say that like, oh well, isn't it scary to do this online because you don't know who the sponsor is? It's like it's actually more transparent than the offline world. Right? I mean, you can find out just about anything about a true, business owner who's got a decade of experience in the real estate industry. You find out a lot about that person. And we seek to find out everything we can about that person. And then we look at the offerings that they have, right? And I'm getting a little bit into our sort of screening process in a way to answer your question about the process. Okay. Yeah, because it's really, really important to us and to the investors, of course. So we look at the property and we question the assumptions on the property and look at the asset itself. And then we look at the business plan. And that's where we do question the assumptions and all that stuff and, seek third-party validation from brokers and other market participants as well. And then, it's either approved or disapproved. Only about 5% of our projects that we look at are approved. So, we look at a lot of deals to get to the ones that you'll actually see on the CrowdStreet marketplace. So, the deal goes up, we send out an email, investors get alerted to the email or alerted to the deal one way or the other. They view the offering on the marketplace and they're able to make an informed investment decision, right? So we try to display the deal in a way that is going to be transparent and easy to understand for a retail investor. And then when they're ready to make that informed investment decision, maybe they ask some questions. They watch the video, they watch the webinar. They interact with either us or the sponsor to make sure they're ready. Then they press the Invest Now button. They go through a 4-step process to transact with the investor, with the sponsor. So we have a direct to investor business model in our marketplace, which is a key differentiator between CrowdStreet and the other guys. What CrowdStreet does is makes a direct connection between the real estate operating company, the sponsor, and the investor. That investor signs the subscription agreement from the real estate operating company, which is a key differentiator. We call it the direct-to-investor model. And then once the deal is complete or finalized, that investor has an investor room, a deal room for them to get updates, for their sponsor to communicate to the investor throughout the entire life of the investment period. So those are some of the high-level overview for the investor. And I say for the investor, a key component of this business for us is what's best for the investor. That's our mantra, guys. I mean, on the marketplace in particular, our mantra is what's best for the investor. And that's how, when we look at proving a deal or getting to know a new sponsor or a new feature, functionality, we always ask ourselves, what's best for the sponsor?
Investor. Can you go over that direct to investors versus?
Sorry, yeah, thank you.
You guys are talking about you use the direct to investors model. Can you talk a little bit about the special purpose model? What are the key differences in those two models?
Sure. The direct to investor model, which is CrowdStreet's model, is different than the special purpose vehicle model, which is kind of the other guys. We took a path less traveled because we looked at the DNA of our team and we said, hey, we're more technology guys, right? We can, and marketing and advertising guys. We're real estate guys as well, but we didn't want to be investment managers. We didn't want to, pool all of our investors together into our LLC and then make an investment and then take a double promote, right? Because that's what happens in the SPV model. Two things really happen there that are sort of negative for the investors, I would say. One is that there's a double promote, right? So they're getting less of a return. Mm-hmm. Two is that they're getting blocked from the actual real estate sponsor, the principal of that deal. There's a blockade that occurs there in the SPV model, right? So philosophically is a completely different approach. Whereas with the direct to investor model, we're saying not only are we not blocking you, we're creating a relationship that is formed and sourced through the CrowdStreet marketplace experience. And then we hope that's a loyal relationship that is repeatable over many years to come. A completely philosophically and structurally different arrangement there. And admittedly, in some cases, the SPV model is the better model when the sponsor just wants a check, when the sponsor doesn't want to be bothered with individual high net worth investors. The SPV model is a better model for them. And if we talked with a sponsor and they said, I don't want to deal with those individual investors, those retail investors, we would say, okay, thanks for making that easy for us. You're not a fit. And we move on. And we do.
That's great. So you said about 35% is multifamily. What other assets do you have on the platform right now? And what types of rates of return do you see guys asking for and getting in this marketplace right now?
Yeah, so we have multifamily assets all over the country. Rates of return on multifamily are, some of the best. And we're really at this point in time in the cycle, we're really paying attention to, peak value and downside, exposure. So stress testing and particular, pro forma that comes across our desk in particular opportunity, and asking, our sponsors about, hey, what happens if it doesn't work out to perfection like this pro forma says? Because I think, we saw this back in 2007. And the good thing about going through multiple market cycles is you see a repeat of the same thing happening, right? So, today it feels a lot like 2007. You're seeing pro formas, and all the pro formas, look similar. Oh, cap rates are going to go up just a little bit, and rents are going to continue to go up at 3 or 4% because that's what's been going on.
And we couldn't move rates over the last 4 years, but you're going to be able to, right? You're going to be able to bump rents even though we couldn't, that kind of stuff, right?
Totally.
Yeah.
Totally. So we really work hard to make sure that we, understand, the different scenarios and stress test a deal. But, by and large, we are seeing better returns in multifamily than other asset types. And I think that's one of the reasons why it's been such a hot performer. That, and people understand it. There's a lot of multifamily out there with the decrease in home ownership. I mean, you guys know all the good reasons why multifamily is a great private real estate investment vehicle for us. And so returns are probably in the high single digits in terms of current cash yield, and with the upside potential. So we do look at current cash yield as a key metric. Many of our offerings are value add opportunities, so we could see an IRR in the mid-teens. Occasionally, it's like an opportunistic or a deep value add opportunity, and we'll see IRRs in the low 20s, right? Over a 3 to 5 year period.
Darren, I often say to Jake, it's not what you buy, it's what you pay. That's my mantra. How do you pre-screen these deals? Because it's amazing. You only take 5% on. So you're going through a lot of deals. You're spending a lot of time pre-screening them. What makes it attractive other than the sponsor itself? Because I know the sponsor is huge. But, I mean, other than that, what else are you looking at in a deal?
Yeah. So in addition to the sponsor, and we have a lot of different metrics about the sponsor that we're looking at. But in addition to them, we're looking at the property itself. We're looking at the asset and going deep on key elements of the asset. In multifamily, it's what kind of amenities do they have on site? What's the state of the units themselves? And what's the location like, of course, in schools and parking and sort of deferred maintenance and all those things, right? And so we're looking at the key metrics of a property condition report and a appraisal and so forth. And we're looking at the market reports. We'll pull 3 or 4 market reports from all the top multifamily brokerage firms in the market, right? Just to confirm everything we think we know about it. Following the asset level review, we go to the business plan, right? And so because we're doing a lot of multifamily with value add or opportunistic sort of business plans, we're having to really test the assumptions. And it's always nice to have a third-party report and appraisal, and the bank coming in, that's making the construction loan or just the senior debt. We're getting to know all about the debt and the debt today, the debt in the future, the sources and uses, how much is the sponsor co-invest. Key element, we're looking for a 10% of the equity as a sponsor co-invest, right? We want skin in the game. We want an alignment of interests. We're looking at the type of investment structure that the sponsor's offering. Is this, a preferred equity piece for the sponsor in a subordinate position? Is this a GP co-invest? Is this, is there institutional pref equity in a superior position to the investor? All those different things come into play with our review. And it's mainly just making sure that things are in line with market and they make sense. We'll coach. We don't negotiate with the sponsors necessarily. We'll always reserve the right to say no to a deal, right? We see, exorbitant fees. We'll coach them to say, hey, we see a lot of deals and we have a lot of data on this market.
You're nudging them to something that's going to make work for your investors. I love it. We're not negotiating, but we probably won't accept this type of transaction.
Yeah, right. Exactly. In that case, maybe we are negotiating. Again, what's best for the investor? What's best for the investor? They might not know that a 4% acquisition fee is over market. We do,
Exactly.
So we'll
Exactly. That's oversight for the investors, actually. It's a safer way to invest for someone that has never invested on a syndication before, because you're essentially pre-screening and you're going to throw the crap out. So that's pretty cool.
Yeah. Yes, exactly.
Darren, how have you been able to grow to 19,000 credit investors? Has it been organic? Has it been by word of mouth, advertising? How is that?
I was wondering that too.
In 5 years, it's really fantastic, actually.
Yeah, thanks, guys. I mean, it's been a big focus of ours. So, as a marketplace operator, we have a business to consumer or B2C type business, and we spend a lot of time focusing on how to build that community. And I use the word community, really purposefully, because communities are based upon trust and integrity and doing the right thing, and having people interact. And we're continuously rolling out new features and functionality to we're building a forum, so that the investor members can communicate and bounce ideas off of each other, again, to build community. I think that we have done a great job taking care of our investors. Every single one of our offerings to date is is performing. Some of them are underperforming slightly, but they're still active. We've never had a deal go bad. Like, knock on wood, right? We are in the investment space, and things will happen. And we always look to work for the sponsor that'll take care of the investor, right? So most of our investments to date, the track record in the CrowdStreet marketplace, they're performing or overperforming, with a few of them slightly underperforming. And so we'll actually tell you exactly what's going on. It's right on the website, right? Total transparency. And what we do to build the community itself, and it's now over 20,000 people. We celebrated that last week, and it grows at about 7% monthly. So we consider ourselves, as a tech company, we consider ourselves really like skilled at digital marketing and demand generation. And there's, as you guys know, that's a tough nut to crack. It's tough to figure out, but when you really do have a skill as a company, you can drive more registration. So we have a bunch of tools in the toolbox to get our brand in front of high net worth accredited investors who are interested in real estate. We focus on different pockets of demographics, both career, or what people do as a career. Where do they live? Are they in the real estate industry? Are they the lawyers, doctors, accountants? The sort of typical friends and family investors. Are they high tech execs? All those different pockets, and we'll run campaigns to sort of say, hey, if you like investing in real estate, now you can do so online, direct to the sponsor, total transparency, right? Very user friendly experience, and that's that's the focus that we've had for a long time now. And that's what causes us. Referrals certainly help as well. People referring their friends and family, saying, hey, I'm building a diversified private real estate investment portfolio. I'm doing it online, just like you've done with Charles Schwab or Fidelity. It's pretty cool. You might want to check this out for yourself. So referrals are huge.
Now, this is one of Jake's favorite questions. How does CrowdStreet get paid?
Good, absolutely. We are in this business to run a profitable enterprise. We have to, in order to deliver the service, of course. So this is a for-profit business. The marketplace is the pricing model there is paid. First of all of our fees are paid by the real estate investment firm, the sponsor. 0 fees to the investors. Investors pay nothing to build a diversified real estate portfolio at Crowdstreet.com, right? And because it works that way. We don't need to charge the investors, even though we're always looking out for the investors and asking ourselves what's best for the investors. They are our lifeblood. But our customers who pay us are actually the real estate investment members or companies. And so they pay us in the marketplace a setup fee, like an onboarding fee. So this is kind of a technology software pricing model, okay? They set up as $10,000 to get, onboarded onto the marketplace, and then they pay us a licensing fee per seat, right? So in software like Salesforce.com charges per seat. If you want to, for every member of your company that uses Salesforce, they have a per seat licensing. We have a per seat licensing per investor that winds up investing with the sponsor, okay? And then we have an ongoing maintenance fee to upkeep the software that helps them communicate to the investors, called the investor room. So it's ongoing investor.
Kind of like a portal, right?
It's a portal. It's an investor portal. Right, exactly. And then we also have, services. So we have an investor relations team in-house at CrowdStreet that is always available for not only our investors, but also our sponsors to help make sure they're being serviced appropriately. So that's the pricing model on Marketplace. And on our white label software, which is now like 60% of our revenue, it's a big piece. We talk a lot about Marketplace. That's what individual investors. So the Marketplace services sort of more people, 20,000 plus current investor members. It's sort of can service 9 million accredited investors. It can service, 100 million or more individual investors, once more Reg A plus offerings come out that are available to non-accredited investors. We seek to service the middle class. We seek to service more investors as a marketplace community. So we spend a lot of time talking about that.
How quickly, if you get a deal on there that really, is a legitimate, 8 cap or 10%, cash on cash return, however people are valuing these, how quickly say it's $10 million. Will that deal get filled up, and will that go?
Yeah. So the average time to fund a deal is about 45 days. The average amount that we're funding is about $1.4 million. That's the 6-month trailing performance, right? So every month we update it, like, are we up, are we down? We're almost always up. We're continuing to increase our productivity as a marketplace. And so at $1.4 million, we're really a supplement still, right? You can't, we would not commit ourselves to $5 or $10 million within a 30-day period. It's just, we've never done it. And so in that period of time, so we're really conservative with our expectations that we set.
What's the average investment? And you may or may not have that. I'm just curious.
I do. Yeah, it's $45,000. And the minimum investment amount on the platform is $10K, but most commonly it's a $25,000 minimum investment on the marketplace. And so with a $25,000 minimum, the average ticket size is $45,000.
Gotcha.
So you've, in the last, I guess, 5 years, you've surpassed $100 million. Is that correct? I got an email, and you've raised over $100 million, right?
Yeah, we surpassed $100 million 2 weeks ago. So it was like, we didn't literally crack the champagne, but figuratively we did.
You got to crack the champagne.
Yeah.
Come on,
I think there were some microbrews, some IPAs were cracked, definitely. But yeah, we'll be celebrating in a more formal manner with the team because it was a big deal. It was a big deal. We celebrated $100 million of equity that was sourced entirely by the CrowdStreet marketplace and the CrowdStreet investor communities on those deals. So that was big time. We think we're going to do an additional $120 million in 2017. So right now we're raising about $12 million monthly. So we should be on track. Yeah, I'm sorry, $10 million monthly. So we should be on track for $120 million in 2017. So more than double what it took us 2.5 years to do in the next.
Snowball's starting to move.
Yeah, it is. It definitely is, and that's with the continued sort of focus on quality and curating. I mean, we are the opposite of Craigslist. It's only the highest quality offerings on the marketplace. So that's always a struggle, a tug of war. Revenue, quality. We're always going to go with quality.
Can you talk just briefly about your white label software? Because I think it'd be a good product for a lot of guys out there. I mean, Jake and I we're looking to syndicate our first deal, and it looks like it would just be an appropriate fit for us.
Well, the cool thing about the white label software, we call it Sponsor Direct, is that anybody can use it, right? You could have a partnership, an entrepreneurial, partnership, or even sole proprietor, but you guys would be perfect. We've got, a real entry level, emerging manager package, which, embeds in your website. We get it launched in a week or two. So it's very simple. You don't need to change your website. It's your existing website that we embedded into. And it gives you all the power of the CrowdStreet marketplace, but it's in a private and secure database, and it's on your website. So at the nucleus of what we deliver in terms of our technology platform is a CRM system that's really built for real estate investors and assets, right? So you're managing all the investors that all your friends and family, you're managing them, you're tracking all the activity, you're emailing them, communicating with them. It's a CRM system for those investors. It's also an asset manager system because we set up different properties, in this system. So you might have an existing portfolio that you wanted to load up, or you might just start with your very first deal like you guys are under. So the white label software can be as small as your very first property, or it could be as big as like some of the biggest commercial real estate firms in the nation. So we have clients like KBS, which is based in Newport Beach, California, a multi-billion-dollar real estate operator. Clients like Taurus Investment Management from Boston, Massachusetts, a global investment management firm with over 800 investors and about 90 assets, and they use our white label software to manage all of those investors and those assets. So those are some of the bigger ones, but really the bread and butter of the white label software is for the mid-market, mid-size private investment real estate firms who may come to us with 5 or 10 or 50, assets in their portfolio, or 10 or 20 or hundreds of investors, and they just want a better way to manage those relationships, a better way to communicate with those investors. and a better way to fundraise. They want to automate their fundraising, and we give them the tools to do that in a very sort of user-friendly way.
Wow. So the first couple of years, 100 million this year. Where do you see yourself in the next 5 years? And I love the fact that you're disrupting, because multifamily needs some kind of disruption, because it's just like the old man's club. There's nobody getting in here. And I just hear from talking to you, this is the new disruption. And I see a lot of guys getting a little anxious, getting a little nervous under the collar, going, uh-oh, we got some big changes on the horizon here.
Yeah. Well, that's true. That there are some definite changes, and we're trying to help those guys who are getting a little uncomfortable is evolve or die.
Right.
And so it's like
I put that on Instagram this morning. That's why I'm laughing on a different post, but that's just funny. I said, grow your business or die slowly.
Yeah, totally. Totally. It's we have to, the technology rate of change is something that is staggering. And, you see it in mobile phones, and you see it in social media, and you see it in cars, and it's just the rate of change is truly staggering. So, there are some fat and happy, sponsors out there that are saying, hey, I don't need to do this yet, because what I have going is so good. I'm making so much hay while the sun is shining during this cycle. And they're right. I mean, but they know that, it won't last forever. They know that the technology is going to have like this mass adoption. They know that online real estate investing just makes sense. They know that digitizing old offline processes with spreadsheets and, printed PPMs or subscription documents and PDF emails and so forth. They know that that's just an archaic system and it's inefficient, but it's working so well for them that they're going to maybe just wait. But yeah, so I guess what that comes down to is, there's a book called Jeffrey Moore, Crossing the Chasm. It's like a classic, technology book. He's kind of a godfather in Silicon Valley. And he explains the adoption within certain technology. And it's like we have the early adopters, and we've had that. For the last 3 years, we've had early adopters, right? Crossing the chasm is getting and scaling your business from the early adopters who are excited but maybe not driving massive revenue to the market, right? The mass market. If you can cross that chasm to get to full sort of adoption up here in the curve, right? Then that's what's going to happen in the next 3 to 5 years, guys. And we're already in it. We're in the very early stages of like mass adoption, and it's going to require better technology from us, better service. Just continue and exceed client expectations. It's going to require us to add a ton of new customers as well. And win, our place in the space. We won't be the only winners, but and that's good because it's a big space. But we'll definitely be one of the winners if we do what we intend on doing.
And then when you get across that bridge in 10 years out, I'll be a laggard that hops on board finally, because I just said slow to pull the trigger. It took me like 5 years to get an iPhone, but I did it. But hey,
yeah.
So in speaking just sort of about our business right now, I'm gonna be a little selfish.
Sure.
I think our average deal size that we've been doing lately is about 140 units. So we would come to you and say, okay, we need we're coming up with a couple $1 million. We could use you guys as a supplement for $1 million. That would probably be a good fit. Is that fair to say?
Yeah, that's right. Supplement for $1 million is right in the strike zone of what we do.
And would you commit to that? So say, because we can do the deal or whatever, but we can. You guys will you would commit to $1 million on that, and basically the money's pretty much a home run if you approve the deal. Is that fair to say?
No, that's inaccurate. A couple of just a twist on that. So with the direct to investor model, again, pro con between the direct versus SPV.
Yeah.
And I don't think really anybody on the SPV is making upfront commitments either. I think a couple of firms have tinkered around with that, and I think they got burnt, and I think they do it less now.
Gotcha.
Really, where you would get an upfront commitment is if you have a private equity real estate fund, right? And that fund might have a .com behind their name, but a traditional private equity real estate fund who says, guys, I love your deal. I'm going to spend several weeks. I'm going to dig deep. And if here's a term sheet, right, for my equity, right? It's a pre-commitment. I'm not saying 100%, like this is not a check, this is my term sheet for you though. And in that case, you're going to get a higher level of certainty, for that $1 million. In our case, it's really important that we set accurate expectations going in, because we don't want to put you in the situation where you're at the closing table, you don't have your equity. That's a bad situation. We manage expectations. If anything, we're undersetting expectations and we're exceeding them because that's important for us to do. But we're probably going to say, hey guys, here's what all of our data says. We've got 2,500 subscriptions. We've got we've raised $100 million, right? And for the metrics that you guys gave us, we think we're going to raise $1 million in 45 days, but we're going to have to work it hard over the 45 days to get you there, right? So the certainty is reasonable, but it's not 100%.
Got it.
Right? So we got to work together to get you to that $1 million over 45 days. Okay. And sometimes we'll hit it in 2 weeks and we'll be like, wow, we really knocked it out of the park on that one. Sometimes we're at 30 days and we're at 500 grand and there's conversations. There's a weekly phone call and status updates. And, okay, here's what are we going to do?
So let me ask you, what is your best, crowdfunding / private equity tip for the listeners?
Yeah, I think a good way to think about it is that, this is a great way to build a private real estate portfolio, right? You can call it crowdfunding, but it really is just if you were to go out and buy duplexes in your hometown, one at a time, you'd be building a private real estate portfolio. That's still available to you. It's another option. Buying a real estate investment trust is another option available to you. Investing, one big check with your guy in your town who's, at the country club, who's the developer, because you know him and he's the big developer in your town. Those are all different ways to buy private real estate. What we do for private investors or individual investors, retail investors, we give you access to like this national network of high quality sponsors. They're not always going to have a deal on the platform because deals come up, they get funded, they go down. Right? It happens every day. Deals up, deals down. So there is a sense of urgency, I guess, there. But, I would say do as much research as you can, get comfortable, with the sponsors, with what it means to invest in private real estate. Research, the documents and articles that we have on our site, which is, helps you understand what is current cash yield, how is IRR calculated. Know what you're getting into before you do it. And then, start small. Start investing in smaller increments that you're comfortable with, because this is investing and there's a risk element to it, until you sort of, get your feet underneath you and really understand the process and understand, what really matches your investment criteria. Give us a call, talk with our investment managers about the process. We do not give investment advice at CrowdStreet. The advice I'm giving is just process-oriented advice. But what we don't do is tell an investor to buy one deal over another deal. That's up to them. This is a there's freedom and self-service in our experience in the CrowdStreet marketplace. But what we do well is to help educate them about private real estate investing, and then we expose them to a lot of different options that may or may not meet their investment criteria. But yeah, spend some time on the different sites. Of course, we'd welcome anybody to join us at crowdstreet.com. And we'd welcome to call us and ask us about the process. But ideally, they're building a real estate portfolio that's diversified by product type and geographic and investment structure and business plan and all that stuff. And they're building wealth in real estate.
So you've obviously had a lot of success, and we want to hear a little bit about what's made you successful. So why don't you share the best habit for success that you do on a daily basis?
Yes. So, my business partner and CEO, Torstein, is an incredible leader. And one of the things that I think, has enabled us to be successful to date is to, set very clear, first of all, to innovate, to do something differently, to take the chance to really, apply what we've learned in internet software and apply that to private real estate investing, right? So the secret is we copied the Amazon, business model.
You're making a Twinkie. You're putting two things together here.
Yeah, exactly. So, that's what we did. Like 2014, we decided to have an intermediary, an online intermediary marketplace, and not become that investment manager. That was a very distinctive decision. The second thing we did was decided to white label our offering, which is Amazon used to do that. They used to say, hey, if you want an e-commerce website, just license ours. We're really good at e-commerce. And they don't do that anymore, but they did. And so we decided on those two things that we would try to do exceptionally well and just stick to those two things. So that's another thing, innovate, be bold, use data to make great decisions, and then stick to it, right? Don't die of indigestion, which they say a lot of startups do, right? There's a bigger chance that startups are going to die from indigestion by trying to do too much. We're just trying to stick to the two things we do exceptionally well, which is run the best direct-to-investor marketplace in the nation, and build an investor community, do what's right by the investor, and then build a leading white label software. In terms of building the team, we're now up to 28 people based in Portland, Oregon. We think that's a strategic advantage. Portland is a great place to build a tech company. We've got a good mix of commercial real estate experts, private equity experts, investment relations experts, and internet software and product development people. So, figuring out the right heads, right butts in the right seats, and building out that is key. We raised some venture capital from some very strategic investors. So be well financed. Don't run out of money. We've got plenty of runway. And so we're very strong and stable. There's no question about that. Those are just some of the things. We do work sort of obsessively and insanely hard. I don't know another way to do that. I wish I knew an easy way. But one of the questions you had was what was your favorite book? One of my favorite books, and it almost was gut wrenching to read, was by Michael Horowitz, one of the VCs with A16, Andreessen Horowitz, and his book's name, The Hard Thing About Hard Things. And he tells a story about how he made it in Silicon Valley with a bunch of different experiences, and it was extremely hard. I mean, and there's just no doubt about it. It's hard. It's hard as hell, And so you just know that going into it. You go until you wake up every day, and you wake up early, and you try to do the right things, and you work really hard and do what's right by your customers and investors. So I think those are some of the things that just pop into my head. Just very real and authentic answer about what's, I think, separated us from the rest of the pack.
Doesn't the hard work feel good though? Not all the time, but man, I enjoy it. I bust my ass every day, and yeah. I wouldn't do it if I didn't like it. So I think there's that side to it as well. So
absolutely, yeah, definitely. There are days where it feels like a real struggle.
Yeah,
yeah. And I know I look in the mirror and I'm like, man, it's accelerating my aging, but maybe I'll be able to.
Drooping today, man.
Yeah.
I hear that.
But we are enjoying it. Yeah.
So what are you excited about right now? I know we've talked a lot about the company. Is there anything that's coming that you want to share with us, or anything big about to pop besides the champagne or the microbrew?
Yeah. So we, the biggest thing, the focus for us, and what we're seeing work is this white label software. We've got 110 customers, at Crowdstreets, 75 of which use the white label software to power their investor portals, to automate their fundraising, to improve efficiencies in investor management, to use as a CRM for their investors, to transact and build their investor network, all those things. And it's right there embedded on their website. We're really excited about that. We think that's empowering the industry to do more sort of on, putting the power in the hands of the individual companies, right? And we think that's just a big shift, right? We think it's a paradigm shift in the capital markets for commercial real estate in particular. So, 36,000 people today, individual retail investors as well as smaller institutions, are using our platform to build wealth in real estate. It's 36,000 people and 110 customers or companies that are using the platform. So, what we're excited about is sort of the experience and the learning that we're getting from all these customers, and that's helping us get better faster, right? We're constantly asking, does this match, your expectations? And if we release something new, kind of like the Steve Jobs effect, didn't ask people if they wanted an iPod. He just gave it to him and said, "This is awesome. You need this." Right. So it's a combination of helping companies identify what they didn't even know they needed, as well as giving them a better way of doing, what they know they need.
Mm-hmm.
I'm sure if we ever break out of our kind of in-house model, we start syndicating, we could probably call you up and use all of the resources you have very quickly. But what is the best way for listeners to get a hold of you?
Well, the best way is probably just go to Crowdstreets.com, and you'll find our phone number, and you'll find our emails, and ask a question and contact us and all that stuff. If it's an individual investor, what they'll want to do is go to the marketplace and start looking at deals. At some point, they'll be prompted to register, and we welcome you to join. The 20,000 other people have done that already. And then if it's a real estate firm that's interested, there's a sponsors tab up there, and then there's some intake forms that they're welcome to fill out or just give us a call. And it's anywhere from a sole proprietor or small partnership. If you guys could use the white label software tomorrow and be up and running with an online fundraising platform for your business. We want to empower entrepreneurs, right? That's a perfect example of what we're trying to do. We also work with big global enterprises, but it's exciting to make a difference in companies and people's lives.
Very cool. Hey, just want to say thank you again to the listeners for making Wheelbarrow Profits Podcast the number one multifamily podcast on iTunes. Darren, it's been great. Awesome show today. Really appreciate your time. And who knows, if Gino and I can ever get into the current model here, maybe we will be calling you for some business here.
Love to have you guys. And thank you so much. You guys have an awesome blog. It's the home for multifamily. I really appreciate this. This podcast has been fantastic. It's really one of my first times doing it. So thanks for giving me the experience, and I look forward to continuing to connect with you guys in the near future here.
Sounds great. Thanks, Darren.
We trust that you enjoyed the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.